Hi traders, in today's live trading workshop session, we are taking a look at the DAX live trade that is going on. So in the first part of our session, we'll be looking at live trades and potential trade setups happening both on the intraday as well as end of day setups. Also, traders, we will then be taking a look at our topic for today's session, which is going to be the 5 mistakes that traders make and how to actually resolve them as well. And then finally, then if there are any Q&A sessions and any updates, we will then send them across, and also we'll then take a look at how our live trades are all doing. This and more in this live trading session. Right, traders, now here we are on our DAX trade on our live trading workshop session. Welcome to that. It's Tune Up on here, founder of Master the Markets Illustrates Conference and the Traders Open Day. So, traders, so here we are on this live trade. I just want to show you what we have done so far. I am going to show you on the 15-minute as well as the 1 hour what we are actually doing. I've got the stretch indicator on the other platform. Over here, I've got all the volume overlaid as well as done by our trade guider team, headed by Gavin Holmes and his team. Really great piece of tool to put on top. You can see that over here, when the confirmation bar came on the 1 hour, volume spikes were also there. And you can see then it also came out of this accumulation and distribution rectangle that they have just released over here in their latest version of the Volume Pro. So when you combine both of it, it's really very strong. Now, how are we actually doing this? Remember in our previous sessions, actually, so let me just pull this up. Actually, for those of you who want to take a look at our videos, I've covered quite a bit on our channel, youtube.com/masterthemarkets. So over there, actually, under the live section, if you go under live section, you can actually see this table here, right? The trend alignment tables, which is what we're talking about over here. And of course, every time we go live, if you subscribe to it and you hit the all bell icon, it will send you a notification to your phone. So then you can tune in with us, okay? And then there's so many other videos of the must watch and all that good quality content that you guys can follow. A lot of the things that I'll be talking about is also based on the stretch principle also, okay? So if you watch the stretch principle videos, they're very powerful, very systematic, very logical, as well as our 7 steps videos as well. That would actually really give you a very good knowledge on how to actually turbo boost even your strategy as well, whatever that you have, okay? Right, because they are very solid frameworks. Now, coming back to this so that I can then just go straight into the nitty-gritty, and then you guys got references to look at. If you take a look at this on the DAX, so what we are having is on the daily, we got the uptrend, right, as indicated by our smart money framework, where we've quantified our tops and bottoms over here. Now, based on that, then I see the trend alignment on every time frame, okay, from the 4 hour to the 1 hour to the 15-minute, and I put it all onto this table over here, all right? So, and that's how we took the trade actually. So if you take a look on the DAX, we got the daily on the upside, phase 1 as well, which is an alignment with the trend, a bottom to top move, which I spoke about in the previous videos on the YouTube videos you can see on our channel. The other thing also, if you take a look on the 4 hour, right? So if I go back to here, we can then take a look on the 4 hour as well. On the 4 hour, you can see that that's also in an uptrend phase 1 with our trend box that was designed by our clients as well. Which you can see, that's why you got to quantify the tops and bottoms, okay? It makes it very clear. So that's your uptrend over there. And then also on the 1 hour as well, you can see that that's also in an uptrend phase 1. So when everything aligns, right, and the 15-minute also is aligning, I can do one of two things. So we got 2 strategies over here. So the first strategy is a bit more longer term towards a range, okay? So if I were to do that, so if you were to see here, what I'm doing is, if you see where the blue line is, right, at 21509, that's where we entered, yes? Stop loss is over here. And then our target is at 21598, okay? That's where we are at the moment. Now, why is my target at 21598 and how would I trail it as of now, just as we just came in, right? In the last 1 hour, it cleared this interruption and there was an outsider bar. If you can see that, just zoom in a little bit because I got the stretch indicator on here, so that's why it's a bit more easier. So what you can see is, if you see this is an outsider bar on the 1 hour time frame and a little bit of a small interruption here, and that's where we can actually move our stop loss, which has been here, to give it room to move the dance, the volatility which I've spoken about in the previous videos as well. Then I can then trail my stop loss. I can put an orange line there, and that's where you got that. Okay, so this is what we have at the moment in terms of um, the DAX, okay? And our target is here. Now, some of you are asking, so why is the target at 21598? The answer is, I've talked about this in the stretch principle videos. As I said, they are on our YouTube channel over here, on the stretch principle over here. You can take a look at that. But how do I get the 21598 number? Is I take a look at the previous bar, right? And I read and I look at the range of that bar, of yesterday's bar for the last 10 bars. And then it's about 249.99. And then I take 80% of that. So if I do 0.8 times 249, and then I'll get 1992. So then what I then do is for today's bar, which is forming over here, this one here. So what we then do is we add the 199 to the low of the bar, okay? Which is synchronized with this low over here where my stop loss is, okay? So when I add that low plus 199, that's what I'm getting at 21598, okay? So that's the how we get the target for this range-based strategy, okay? Now there's another one that we also do on this. So we will let this run and we'll see how this goes. That was the best one that I saw for today. Now, the other strategy that we also take a look at is when there is trend alignment across all of them. If you want more frequency, we can start taking a look at the 15-minute time frame as well. Okay, so over here, if you go back to here, and then you can combine that with the trade guide, the volume as well. The volume is backing up, so that's good. The volume is backing up as we got into this. And then we also took out the upper stretch line as well, okay, on the first strategy. Yeah. Now on the second strategy, as I talked about in the last live stream, over here, as you can see, this one here, isn't it? Let me see over here. When I do a replay, right? So over here on the 15-minute, right? So you had a downtrend phase one, but as it took out that, so in real time, it usually comes on when the second bar opens, right? So there we go. So you had that, right? So then you had the uptrend phase one happen. There was good volume spikes over here, which then turned around and confirmed this bottom over here. Now, when we had that, the entry on the close over there, stop loss for the low, which is very similar to where the trigger line is coming as well by the trade guider volume indicators. After that, then traders, where do you then get out on this strategy? What you can do is, because we got the OE table, we have found that 60% of the time it will get to the 1 ATR level, okay, the 1 ATR level. So what do I mean by that? So from here, if you start to take a look, which I've done it on the MT4, but I'll just show it to you here as well. If I then do that, and then my stop loss here, okay, right? And then after that, I'm taking a look at the 1 ATR number over here. That's about 24, isn't it? I can read that over here, 1 ATR number. So then I do 24 points from here. Okay, 24 points. And there we go, right? So that will be my number 21484. And if I were to put a target there, it almost got there by the next 15-minute, right? Now, some of you are asking, okay, how do I get this 1 ATR number, which it gets to 50% of the time? That's what all the OE tables tell you over here. I talked about this in the previous session as well. just to quickly show you that I can do the ATR number, then it will start to project it out. Okay, so 0.25, go to 0.25 to start. And then if I were to do that, then the table will start to get populated, crunch it over the last 14, 15 years, right? So I'm doing it, running it from 2010 onwards on the 15-minute time frame. You can do this on any time frame. And then you can see, right, the one ATR, it gets there 56% of the time, okay? But of course, because I am cherry picking, I'm not doing all of them. This data is for all of them, right? For all these dots over here, how much it runs. So if you want to take all of them, but it gets a bit messy, you know, you need to take it also during the normal trading hours as well. Also, the volume is not there to make it go towards this. So I am cherry picking, I'm selecting the better runners, so my probability will start to improve. So that's why I look at the trend alignment tables and I am selecting them, okay? Right, so that's what we do. So we look at the trend alignment table. So once all that is aligned, then we go through that, right? So then you can see on the third, on the fourth 15-minute, it almost got there even with this one. So that's from the one of the strategies. So that's the second strategy, right? So it's a bit more shorter target based. Now, of course, some of you say that, oh, I don't like set target and all that. There's another way. You can just make a small variation to this. Once all trend aligned, right? You enter on the 15-minute with good volume, and then after that, you keep trailing it basically. Okay, so that's another way that you can be doing this. According to that, would you have got stop loss if the initial stop loss was there? You would have trailed it on there. So then you go back to the 1 hour, and then you can either get to your range target through the 1 hour, or you can then do your trail through the 15-minute and see where the next next stop confirms. Okay, so for example, on this one over here, if you wanted to keep trailing it on the 15-minute time frame, let me just do that for you guys. For those of you who do not want to set a target, right? So you've got all your entry based on your trend alignment table, and then you just want to keep trailing it on the 15-minute, right, time frame. So you would hold that over there. So let's keep seeing that. It still hasn't confirmed its stop over there. So you let it run. That's an interruption there. If you do not want to set a target, this is what I mean. Then after that, now this is where it is. Then as of now, you would still be in that trade and your trailing stop loss would be about here. And then your entry was around here. Okay, so if I were to take a look at the numbers over here, so you will be here at 21459 is where you entered. Trailing stop loss at 21491. A little bit of profit locked in, and you'll only get out of this once the top confirms on the 15-minute. This is another way of exit, okay? But if you didn't want that, if you wanted pre-targets, you would have got out here at 1 ATR, 21478, banked in your profits over there. I've got clients who are doing that, really doing very well as well, okay? All of these things, of course, you need to test that so that you get the confidence for yourself, okay? So on the 1 hour, so this is going good towards our favor at the moment. We will run it and see how it goes. Okay, 21598 is where my range is, and we'll see how that goes on the first strategy, right? The second strategy is a bit more high frequency. Now on the other ones, I did take a look, but they were not really aligning for today. Okay, one maybe I can do with you guys. Gold is a good one, so let's take a look. Gold is on a strong bull run at the moment. So if I take a look at gold at the moment, look at that, right? Nice bull run. We did capture this on our end of day strategies on the elite trading room. So that's a bit of a different strategy where we look at different time frames. We take an entry on the 4 hour where we are looking for the 4 hour bottom to become actually a daily and then a weekly bottom, and then we write the OE from there basically. That's in a nutshell. You can do that on different time frames also. And we have taught clients on that as well. That's very systematic way, you know, of looking at it. Because remember, every weekly or monthly bottom was once a 15-minute, 1 hour bottom, 4 hour bottom, and all that, right? Which holds on to that level. So over here on the RSW, you can see we did take that trade on the 16th over here, which we log in into the journal, which in fact I'll be talking about in our topic actually later on. 2584, 2535. That's why we're looking for 2854. Actually, today it hit the target actually 2854. Only today then it hit that. So we'll update that later on onto the spreadsheet. I think when you actually do that, I think we need to see how that thing works. So very small risk that we had because we're entering on a much more smaller time frame over there. And let me just put that there, 2854, and that's what we are getting, right? So 5.51% of the profit, what we are getting over here, right? So I will work on the formulas later. I think that should do it on the, oh, actually that should be the one, isn't it? That's right. So that was that. We can actually close that later. I'll update that later on. But you can see that's another one. But for intraday purposes, what we will do is we will see that this is an uptrend phase one. So let me update the journal over there. Right. So this one here. So we got uptrend phase one. And then on the 4 hour, let me just quickly do that as well. On the 4 hour, that's an uptrend phase one also, right? So we got that. And then on the 1 hour, we will take a look over here on the 1 hour. Let me just do it here. I think it's a bit more easier. And there we go. We got the uptrend as well, phase one, right? Might be confirming at the moment. And the 15-minute, if I take a look at the 15-minute chart, at the moment it's an uptrend phase two. So perfect, right? Still trend intact. And I'm going to go for that. So uptrend phase two at the moment, right? And then 1 hour stretch, of course, to the upside, which we can see. It has taken out the green line over here, as you can see, right? It's taken out that towards the upside. So probability towards the upper side. And it's made its range as well. Okay, so you could have done this on the earlier strategy, the strategy one where we are taking towards the range as well. Okay, so it's definitely done its ATR range. Let me just quickly confirm that on the daily. You can see this one here, $33, 0.8 times 33 is definitely done it. It's about 24, isn't it? It's about 26, something like that. There you go. So 26. This indicator on the right-hand side will tell me the bar range, which was done by our clients as well. A lot of the things that you're actually seeing was done by our clients. So it's a very good example of the community itself, uplifting the community. $37 is already done. So it's done the range already. So after this, it might have a bit of a hiccup, what we have seen. It usually then starts to consolidate. So just be careful on that. So that's what we got on the gold. So if you do want to take further trades on this, I would say that wait for the 15-minute to show a confirmation bottom. And then after that, what you can then do is refer to your OE tables, right? Refer to your OE tables before you put a target in place, okay? So over here, when you go back to here, you can see that's the 1 ATR number. So the 1 ATR number over here on the 15-minute time frame, you can read it off here, right? So that would be $3.31, but we usually will take it once it confirms, okay? So from the close, then we take the $3.31. Now, those of you, I know some of you are asking, okay, how do I understand about this OE and all of this that you're talking about? That's what I was saying, that I know definitely check out 7 Steps to CTP, okay? This is a framework, okay? A lot of people ask us like, oh, it's a smart money indicator that you have designed. Is it a buy and sell? Is it simple? I just buy every dot. No, it's not. Sorry to burst your excitement there, but it's just a framework, okay? It's a framework which will then, if you know how to use it properly, and you can use it on any strategy, you can draw Fibonacci lines based on that framework as well. It would just tell you how much move is left. Not only that, it will also tell you how much volatility you're meant to expect, so that you also know where to place your stop losses as well. Okay, that's why we also designed the MAE number as well, and then time too. So if you look at the MAE number, I'm going to change that to less than or equal to, you'll see over here then where to place your stop loss. So if I place my stop loss 1.5 ATR away from entry, I won't get stopped out 95% of the time. Now that is a very powerful statistics over 15 years on this instrument, which will also give you the confidence when it comes against you to still hold on to your trade, okay? But then after this, then you need to then construct your strategy, which what we're giving you examples and all of that. That's why I highly recommend 7 steps to CTP. You can use this on any strategy with a solid framework. You can put the framework onto any strategy and you can use it. Okay. Good. So I think that's that one there. So we got the gold and then we got the DAX. So let's see how that carries on. And on the DAX, it is a little bit retracing. That's all fine. We'll wait and see how it carries on towards its target. Now, let me then, in the time being, let me carry on to the topic, isn't it? The topic for today, which is on the 5 mistakes that traders make, right? So the team had prepared a small presentation, which I will go through. So let me see if I can get that up for you guys. Let me see. There we go. And right, so I think right, so I think it's almost ready to go. I think there was a small typo. Let me just get that ready for you guys. Good. So I've got that one there. Right. Let me see. Okay. Right. So I've got that one. So let me just put that for you guys. Good. So I believe you guys should be able to see this right now. 5 mistakes that traders make. Now, what is the 5 main ones that we have collected from our research is that, and from also talking to the clients, is that the first one is most of them come to me without any crib sheet, right? Any strategy rules, basically. In fact, most of them are trading a little bit on discretionary or impulse, thinking that, okay, that's a good trade. Or some of them, when they get our indicator and all that, then they just feel that, oh yeah, just when the dot comes, I'll just enter every single dot without any clear plan. In fact, some of them will talk about their plan or their rule set, but when I ask them, have you written it all down? The answer is usually no, right? So we've done a lot of videos on this, but I would highly recommend that in any crib sheet that you design, you should have the 5 components in it, right? Do you all know what the 5 components are? You can see some people putting onto the Zoom chat and all that. But you see over here, the 5 components is the first component. Some of you say not really sure, but the first component would be the concept and objective. The concept and objective of the strategy. The second thing then would be the entry rules. Where would you enter the trade and all? And then the third thing then would be your stop loss rules. And the fourth would be your your target, sorry, and then 5 would be your risk management rules. Okay, so these are the 5 things that you must have clearly laid out in different subdivisions as well, and also then you type it all in so that's very clear in front of you. Okay, for our clients, we give them the template as well. If you guys want it, you can always email us at clientservice@masterthemarkets.net. Okay. Right. Then the other thing we found is also over trading. Okay. Because usually this happens with link to number one is that when you don't have a clear set of rules, you start to buy and sell every single signal that comes. In fact, it happens even more when one of your trades doesn't work, it loses, and then you start to go do some revenge trading or start to think, you know what, I need to pull my equity curve up. Let me actually place another trade. I think this is going to go the other way. Or some people I've also seen when I've talked to my clients is that they start to do hedging, right? So that they can't lose. If the first position was going up and then suddenly you get this big, massive red bars, and I saw that on the beginning of the week, there were a lot of gaps and all of that, right? So people would have panicked and all that if they were in the opposite direction, and then they start to hedge it, start to go short as well, and then got long position thinking that, they got it now balanced out so the long position cannot then go further down. But the worst part when it happens is both your long and short also starts to lose, and you start to see it, and then you start to get panicky, and then you can't take the pain, and then you start to come out of it. All this happens because of link to number one. You don't have a very clear plan of entry, stop loss, and exit rules, okay? And you don't know your numbers as well for your strategy and why you should continue to work in the long run, okay? All this you must know, or else what will happen is you will start to overtrade, okay? You start to overanalyze markets, look at different time frames unnecessarily, and you also won't be able to let profits run also and cut your losses short. So these are all the things that will start to happen with the overtrading, okay? Right. Now, the other thing that we also found is people do not have an optimization component. Now, what do I mean by this? Now, the three components which are essential for any kind of trading system, okay? The first is the strategy component, which everybody runs for. Online, you can see it. Everybody keeps running for strategies, but that's only 1/3 of the entire trading system. In fact, we've been called to come and lecture for the Society of Technical Analysis. We'll be one of the 5 lecturers over there on the new STA course, which I talked about in the last video as well. We'll be talking about all of this also to make an automated trading system. The second component is the psychology component, because without, you can have the best plan. It's just like, you have the best weight loss uh, plan given to you or strategy, and part of the strategy is, eat low carbs, go to the gym about 5 days, even if it's 30 minutes, be on the treadmill, be consistent and all of that. But when it's snowing, when it's raining, it's gray outside, especially in the UK, we get that quite a lot. And then what happens? Your psychology plays you and then says, "Oh, tomorrow I'll go. I'll skip one day." And then you know what happens after that, right? One day becomes 2 days, and then one week you don't go to the gym and all that. So you might have the best plan, but psychology-wise, you might not have the best thing to carry through. And usually, I always see this in the gyms when I go in January. It's be fully packed, right? The first 2 weeks, but then when you go on the third week, oh man, it's like haunted. There's not over. There's only about 10 people in the gym. So that's why the psychology is important. The same thing in trading, okay? You need to have the tenacity, the peak state performance, right? In terms of psychology to consistently execute so that your strategy numbers will start to materialize and monetize, okay? We show that on the live trading room as well. We don't shy from taking losses and wins, okay? We show it very transparently. The third thing then we also then have is the optimization component, which is what I'm talking about here. Now, what is the optimization component about? The optimization component, first of all, before you optimize anything, you need to have a monitoring mechanism. A monitoring mechanism. Now, what is that monitoring mechanism and what is it monitoring against? Okay. The first thing that you must have is a trade journal. So over here, what we have is in Master the Markets, as you can see, right? So we got the trade journal and it tracks every single thing, right? Every single trade that we are taking for this year, right? How many trades are got running as well? How many trades are taking a loss? We don't shy from taking our losses. That's a true professional, right? And that's the truth of trading, yes? So DAX was one of our biggest runners, but it just broke even after this losses that you got over here, right? So every single thing must be tracked. And for every single strategy as well, the 50% OE, we got the RSW, which I just showed you on the gold and the Dow, which was still running. So all these things, you must track that with a journal, okay? Now, what are you tracking against is the question, okay? What are you tracking it against? What are you monitoring it against, okay? So the trade journal is first thing you must have to monitor. What are you tracking it against? So basically, you're tracking it against all your backtesting results, okay, on how it has performed over the last few years. Let's say you've tested it over the last 10 years through your automated trading systems, or even manually you've just tested it for 3 years. The main number that you're looking for is your drawdown numbers. Is your current system in real time, your one strategy or three strategy or five strategies that you're doing, your current system, has it exceeded its drawdown? Is it deteriorating? It's time to pull it out? All this you must be able to track. That's what you're monitoring against. Now, If it's also not performing according to its profit potential and its average over the years, and also its drawdown is exceeding, that's when you need to start looking at the optimization component. Do I need to optimize anything at the moment? Go back to your drawing board, go back to your concept objective of your strategy, go back to your all your rules in your crib sheet. That's why it's very important to write it all down. Okay, so that's what this optimization component is about. But remember that if your strategy is doing very well and it's on par, it's getting towards its profits and all of that, and its drawdowns are not exceeded, then there's no need to optimize. Why optimize something when it's working very well, isn't it? Right? So remember that. And a very good key thing even to think about optimization, a question to ask is, why must the strategy continue to work? Okay, this is one of the questions that the biggest hedge fund, billionaire trader and investor, 160 billion in asset under management, Ray Dalio, keeps asking. Why must your strategy continue to work? You must go deep and you must keep asking that. Good. Now, then the other thing is the lack of adaptability. This is another mistake, okay? Because the strategy or the system that you create, it's got lack of adaptability. And usually a lack of adaptability happens because you don't have statistical validation for why your strategy must continue to work, or it must reach its target potentials and all of that. A lot of times I've seen online as well, people just make up their reward to risk ratios. The question to really ask, I mean, you can always plug some number and say 5 to 1. I want to make a 5 to 1 strategy. And every time you enter, based on where you put your stop loss, you make your stop loss very tight as well. And you make a 5 to 1 reward to risk ratio target. But the real question to ask is, why must the market go there, right? And why must it go through there in all kinds of seasonalities and all kind of different market seasons? Why must your strategy be able to adapt, right? So failing to adjust your trading strategies based on changing market conditions is another big mistake that actually traders do also, you know? So this is very important. This is another mistake that we have actually seen. This must all be factored into your crib sheet rules. So that's why I always say the framework that you trade your strategy on is very, very critical. Okay, very, very critical. And then the final fifth mistake that we saw is the poor trade management. Okay, now even a very poor strategy which has been constructed on very poor strategy rules can become profitable based on good trade management. Okay, what do I mean by poor trade management? Basically, you sometimes, you know, the worst thing is you don't even use a stop loss, right? And the worst thing is I came across a trader who was trading for 5 years, very successful entrepreneur, very, very big multimillionaire. But he said too, you know, I only got to know about stop loss only after I came to study from you. After I looked at all your video series, I was a bit shocked. Oh wow, he's been trading for 5 years and he was trading on very big positions, like 100 grand positions and all of that, even 500,000 positions on the indexes. So definitely you must have your risk management, know what a stop loss is, initial stop loss, how to trail your stop loss as well. You know, another mistake, because, you know, psychology might not be good. Sometimes you don't trail your stop loss. You know, you think that, let's wait for it to, you know, finish its retracement. I'm confident that it will come back up again, you know, and then the losses get bigger and bigger. So you must have your trailing stop loss mechanism and all written out in your crib sheet. Very important. Also, another thing is that you don't monitor your trades regularly, and this is what happens with poor trade management as well. Then you're not able to trade your stop loss accordingly. So one quick tip I'll give you in terms of good trade management, right, and so that you know how to manage your trades, is you must count for all the what if scenarios. Okay, what if this happens? What would you do? What if you had a 500 point gap on a particular trade? What would you do? What if you had an adverse news situation on intraday trade that you're holding? In about 30 minutes, a very big news from the Bank of England is going to come on interest rates. What would you do then? How would you adjust your stop loss? Would you exit? Would you scale up? What would you do? What if scenarios? So you must plan for all of them. And for this, you know, sometimes I would say a good mentor who has really walk the talk and really taking real trades and showing you real time and all the transparency, they will can help you, because they would have can project and anticipate for all the what if scenarios and can teach you that as well. This is all that we do with our clients. Okay, remember, you know, the real truth of trading, we always say, is not to hype it up and say that, you know what, you can make 10-20% tomorrow and all of that. The real truth of trading is to really know your numbers. Okay, it doesn't mean that every single trade then is going to be a winner or whatsoever. The losses, you must become immune to that. It's part of the game. It's like breathing in and out. And then the wins will come at their own time. They will look after themselves. Okay, so this is why we don't shy away from showing losses or wins whenever the equity curve is down or towards the upside. Even when it's on the upside, when 2022 we had about 70 over percent, we really had a good year that year on the end of day strategies. People are not getting overly excited as professionals. We always keep looking at the drawdowns and why the strategy must continue to work. Okay, so these are the things that you must contemplate on, and that's what a good mentor can guide you. Right. So I think I've covered quite a bit. I think we're running a little bit out of time as well. So that's on the thing. So let me just do the recap on this. So let me just do that. Let me come out of here and let me switch it on to the trading view chart over here. So there we go. So I think we covered quite a lot, running on a little bit over time a bit, 20 past 2 here in the UK. First thing we looked at is some potential trades, and the main one I was looking at was the DAX over here. And then the second one, then we looked at the topic, which was the 5 mistakes that traders make. And then the third thing is, if there are any questions coming in, I think the main question that comes in is, how would you actually construct a strategy and how do you develop confidence in the strategy? As I said, it's a whole process. Basically, I would say start off with writing the 5 components what I talked about, okay, of a strategy. Write that first, and then do some testing on it, and then test it in real time. Okay. Then, of course, if you guys need some help, then of course we are always here to help you. And remember the 3 components. There's quite a lot that I covered here on this video. So definitely go and look through the recording for this as well. Okay. Now, in terms of this particular trade, let me go to here. This is where we had all the levels, isn't it? So this is where we're at 21598. So I'll wait on that and see how it progresses. We might be tracking it on our TradingView channel, so you can join us also there, Master the Markets 2010, where I will post the different trades over there. Okay, so that's that one there on the DAX. And then the other thing is the gold, right? So it's lifting a little bit, but we'll wait for this bottom to confirm according to our framework, and then we'll see and then take it according to strategy number 2, which is a bit more smaller target based on 1 ATR levels, which is what this open equity is for this gold trade. Again, traders, everything that we talk about here, remember that you can always apply it on your own strategies. You can pull out something and apply the principles. That's how we teach, actually. Last few reminders, YouTube channel, you can join it here, youtube.com/masterthemarkets. And after that, once you subscribe, then you can hit the all bell icon, and then that will push you all of the notifications over here. Really great quality content. That's what we actually are very well known for, that you can learn from. And then the other thing also is the 7 steps to CTP.com, right? Amazing amount of material over here. How does it look once you have put in your name and email address and all of that number if you want to get live trading updates? The 7 videos will all be here, and then you can watch that at your own free time, and then you can ask us any questions as well. Okay. All right, traders, I guess that's pretty much that from me on this video here. And as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master.